Solar stocks certainly have taken it on the chin pretty sharply since Trump was elected for the second time. We can see broadly some of the biggest solar energy stocks are down. And more recently, this is a big part of the reason why the Unleashing American Energy Executive Order that President Trump signed, which on the surface is more, seems like affects maybe wind more, but there are some things in solar that are affected. And also President Trump has another executive orders ordered a pause on funding related to the IRA, the Inflation Reduction Act, which had a lot of things in it for renewables. Certainly it affects solar. You ready to take a closer look at solar stocks?
It's all moving pretty fast, but let's see if we can get caught up here.
We're getting new information just about every day. We'll dig in, talk about some of the companies, the implications, and also looking forward, where we think investors might want to consider putting money or not. So we'll get into that here. But first, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go check out fool.com/unscripted. Go to our special link there, fool.com/unscripted. You can get access to The Motley Fool's 10 best stocks to buy right now. Okay, Tyler, I'm going to bring up that screen. This is since Trump was elected. We can really go back multiple years and see that a lot of solar industry stocks are down substantially over that period. We have an outlier here, First Solar, that we'll talk about, but let's talk about the whole backdrop, everything that's led up to where we are now that's sent solar stocks down, and the additional pressures and concerns with the Trump administration that are affecting the economics of the solar industry.
Yeah, we'll call it the tale of two solar markets, because there are two very distinct markets when we talk about solar. There's residential and there's kind of commercial utility scale. These are two very different beasts when you're looking at them in terms of the business. And one of the things I would like to point out with that chart that you showed was a lot of the businesses that were down significantly, notably Solar Edge Technologies and Phase Energy, are heavily concentrated on the residential side, whereas First Solar is much more of a utility scale side, and it paints a picture of the differences there, right? Over the past several years, and this is pre a lot of the things we've been seeing lately, is the biggest factor that it has impacted the residential solar industry has been rising interest rates. As much as we want to say politics or something like that, but rising interest rates and the ability to finance a lot of these projects, it has been pretty much the determining factor in the success of these businesses over the long term. When money was really, really cheap for much of the 2010s and that post-COVID, pre-supply chain inflation spike that we had pretty cheap financing. You could get a second mortgage or a home equity line of credit for like 4%, 5%, throw on some of the tax credits that were available for these sort of things, and all of a sudden it became pretty economical to do a residential installation at your house for solar. I think somebody on this video channel has one of those residential solar systems in their home.
And that person may have
sense.
also benefited greatly from said ultra low interest rates.
Yes.
To put it into context, a personal loan, unsecured personal loan that I was able to get is around 3.5% interest. Certainly made it far more economical. And that has, like you said, Tyler, the interest rates along with some of the metering policies around solar in states like California, which is a massive, massive state it has an outsized portion of the country's solar installations, and some other pressures in other parts of the world too, from a cyclical perspective, pushed residential solar into a massive downturn. You look at ENPH and Solar Edge, the two companies that have the vast majority of the electronics that go on the solar panels. Combined, I think they have something like 90% of the market share in North America. You're seeing like between 60 and 80% decline in unit sales of the individual units that go on each panel. So massive, massive decline. Their businesses are almost entirely residential. What have we seen on the utility side?
Utility, a little less so. Obviously, financing makes it a little bit more challenging to pencil deals. But if you look at some of the companies like Canadian Solar, which is a blend of residential and utility, and First Solar, which is almost exclusive utility, it's still been quite strong. If you look at First Solar's backlog of orders, it's about 5 to 6 years of running its facilities flat out and not exhausting its entire backlog. There was a massive order book that has been it's more or less been holding steady in recent years, but the amount that they brought on, because they have been so measured, part of the reason I own this one particularly is because
Mhm.
it has been a very conservative and measured company on growth, being like, look, we don't want to expand too much because this is a cyclical industry, and they've managed that very well. And so the backlog was just so big. They're like, okay, we can add capacity now. And so that's part of the reason why this company has likely been, we'll call it the outlier in the solar industry for much of
Yeah.
the past couple of years. Is been it found a way to grow and to manage its business without having to take on debt, without like large inventory write downs or the big declines in sales that we've seen at on the residential side.
Yeah, its business has certainly held up incredibly well, and even like you said, grown because of how well management has run their business. Now, here we are. That's the backdrop of what's happened. We're in this downturn, and you layer on some implications from the Trump administration that is deprioritizing renewables more so really solar, or excuse me, more so wind, offshore wind, some effects on onshore wind as well that we're going to see with executive orders, and reprioritizing more development of oil and gas. We're not really going to, we don't need to get into the oil and gas very much, but the short version is they're making it more of an open season, increasing accessibility for oil and gas producers to have access to leases on federal lands to be able to develop those resources, and basically turning off the switch for development of wind. We're going to see how that plays out over the long term, but thinking about solar, there's a couple of things that are pretty substantial with the IRA, Inflation Reduction Act, that look like they're being put on hold for now. Again, Congress, per the Constitution, has power of the purse. They're the ones that write the laws, and they're the ones that fund all of the different parts of the administration. It's the administration's job to allocate those resources and to manage them. So for right now, we see a lot of things are on pause. What do you think are the near-term implications for the solar industry? And then thinking longer term, what are your expectations?
A couple things that this brings into question because of the pause and when it gets reinstated, we're not sure. We're not constitutional law guys here. I don't think people come to this channel for that, but I think
Right.
the ruling is that basically the money that was appropriated for this budget year has to be exhausted by the end of the year, or because that's the mandate. So there's that. So hopefully, whatever, or likely, we should see a return to that in the coming months. But the big thing is like people who are making decisions on new systems today, we are, probably looking at it without some of the availabilities of some of the energy tax credits, some of the production tax credits. And there was also several loan guarantees that were made to manufacturers who were looking to expand their presence in the United States. And this was kind of a reaction to the supply chain disruptions that we saw from 2021, in addition to the Inflation Reduction Act, where it was looking to expand capacity, domestic production, nearshoring, supply chain resiliency was it was kind of a euphemism for we need to not rely so much on China, especially when you have a global pandemic and they have much more robust economic shutdowns than we do. With the Inflation Reduction Act loan grants, it appears that if the money has not yet been dispersed, it's on hold. So may delay some construction projects until they're done. If those loans have not been guaranteed yet, it's hard to tell whether or not those will actually go through. This is one of those things where we're really trying to peek into a crystal ball. And not only that from the business cycles, but also a little bit from a lens of taking the gauge of the wind of the political environment. And that makes it even more challenging to the point where it feels like it's our jobs or why we do this is to give people actionable advice. But this is just one of those ones where it's a little bit of I'm not 100% certain. And so in cases like that, very much my kind of default thing is let's just kind of sit tight and see what happens.
Yeah, I think to a large extent that probably makes sense. But I'm going to make the case here for some things that the Trump administration is prioritizing that a few companies in the solar industry have been savvy to navigate towards. And these are things that they did that were, frankly, they were prioritized. These were priorities before the Trump administration. You talked about supply chain issues. So for solar, primarily manufacturers in the US and Mexico. They do have some other manufacturing in Southeast Asia and Vietnam, you said. But because of the fact that they do so much domestic manufacturing, that's a positive, I think, broadly. You look at a company like ENPH, it's based in Fremont, California, has a history of using contract manufacturers. And a big step that they took pretty early in the downturn, Tyler, of residential solar was to reallocate resources for their manufacturing. They downsized, they closed a facility that was in Europe, and they consolidated from 3 facilities to 2 facilities in the US, while still maintaining the ability to grow capacity. Ideally, once we get through this downturn in the cycle, and there were some signs, signs quarter over quarter, that there was a little bit of a bounce back, maybe taking market share if maybe the market not recovering, but they positioned the business to manufacture in the US and also positioned it for growth when the cycle does return to growth. And this is really important because I'm going to bring it up here on the screen. The IRA and other laws that have been put in place have started to prioritize American manufacturing. So their IQ8 and microinverter now complies with the Build America, Buy America Act. And what that means is that it qualifies for federal bidding. And Trump and the Trump administration generally has been pretty positive on solar, more so than wind. So we'll see how it plays out with further executive actions and any legislation that Congress takes up. But it does seem like the solar industry is a little more insulated and a little better structured for some recovery going forward. But again, the key, and this is kind of where the wait and see is for me, is it's less about the change in administration and its priorities, and it's more about the state of the industry, Tyler, with the headwinds that residential solar continues to face beyond First Solar, which I continue to own and has largely been a winner, even though its stock is down over the past couple of years. There are a lot of questions in that residential space that still need to be answered. Looking across that space, there are 2 stocks that stand out to me as potentially being compelling for investors that are willing to take on some risk. The first one is Canadian Solar, which if you look at it on a book value basis, it looks extremely cheap. It looks extremely, extremely cheap. And part of that is because there are a lot of assets on its balance sheet because it's also a developer of these utility scale projects. So it carries things on its balance sheet before eventually selling those developed projects. Ideally, it's going to be able to monetize some of that book without having to take big write-downs. And that should be a boon, I think, for investors over the long term. They've prioritized their battery business as well. And that seems to be the battery attachment rates for residential and utility scale solar are increasing substantially because more utilities want to be able to monetize their solar, the energy produced from solar, whenever there's demand and not just necessarily when the sun is shining. So we're seeing increased attachment rates for batteries. That's a positive for Canadian Solar. And then looking across the more residential focused side of the industry, the thing that continues to impress me about ENPH is that the business generated positive free cash flow every single quarter through this downturn so far, hasn't had to do things monkeying with the books like sell all of its inventory to do that. It's maintained pretty steady inventory. It's brought it down, but it hasn't stopped manufacturing just to generate fake free cash flow. It's been able to consistently generate free cash flow while also managing enough inventory to support its distributors and its resellers' needs. I think that's really, really impressive. It's also taken market share. If you look at last quarter, we continued to see SolarEdge's business continue to shrink on a sequential basis. ENPH's business improved on a sequential basis. So it looks like ENPH is starting to prove out as the preferred partner for more of the installers, distributors, and the resellers. So I think there's a lot to like there. Their battery technology has gotten ahead of SolarEdge, and their ecosystem increases attach rates for batteries, for EV chargers, and those sorts of things. So I think right now it looks like the one that's most likely to come through with really good momentum and accelerate on the other side. And I think there's the best margin of safety because you've got a very strong balance sheet with a lot of net cash and a business that's still generating positive free cash flow that I think that gives investors margin of safety. But again, there's so much uncertainty right now that you have to be ready to ride out who knows how many more potential years of downturn before we return to full-on growth of solar, and the potential that the quality of the business erodes along the way.